Thanks so much for being with us. With me right now is Robert Jones, CEO at United Bancorp of Alabama. Robert, it's great to see you. How are you?
Doing well, Christine. Thank you.
Robert, just to start off with, can you tell me a bit about the company?
Sure, be glad to. Our bank, United Bank, was founded in 1904, and we're located in Southwest Alabama and along the Gulf Coast and serve the Panhandle of Florida. The bank's legacy was that we started out in small communities who helped grow those communities during a vibrant time in our country's history, and had a long tradition in agricultural lending, which was the foundation of our business model, and have been very active in helping communities in this part of the state grow. In the mid 80s, we formed a single bank holding company, United Bancorp of Alabama, Inc. And then later in 2010, we formed the subsidiary of the holding company, UB Community Development, after we received our CDFI certification. And that really began the new journey that the company's been on since that time in the area of community and economic development and helping grow the business model for us. So we run a traditional bank with a very non-traditional focus on community and economic development.
Thanks very much for that. Well, the bank recently reported its Q1 earnings. What were some of the highlights in your opinion?
Well, I think, like many organizations, Q1 was a carryover of the momentum coming out of 2019. We were very fortunate in 2019 to have a very strong year. American Banker magazine ranked us number 9 out of the top 200 publicly traded banks in America, less than $2 billion. So we moved up from 16 to number 9 in 2019. The first quarter looked very solid. We had a lot of momentum coming into the year. CB Analytics in their rankings have us is number 29, or in the top 10% of our peer group nationally. Then, like most of the nation, we ran into this unexpected event, the COVID pandemic, which has changed everything at this point. So we have momentum carrying into the second quarter. Probably one of the big events in the first quarter because of our CDFI designation. We participate in a number of unique programs to bring economic resiliency and energy to distressed communities. And we were fortunate to get a $799,000 FA award, which was reported in our first quarter earnings. So we had strong margins. Asset quality continued to be at acceptable levels and gave us a good position to go into 2020. We did add an additional $500,000 in our reserves during the quarter because of the uncertainty we saw evolving with the COVID impact, which at that time and continues to be a high degree of uncertainty. So we've been building substantial strength in the balance sheet, remain very liquid and fortunate to have our capital that we brought in through our public offering last year.
And I assumed most of the loans that you have been processing are PPP. What's some of the value of those PPP loans, and how many have you processed?
We've done approximately 900 PPP loans, about roughly $50 million. About 200 of those 900 are from non-customers. We very early into the process took the position that this was an essential service that needed to be provided in our communities and to small businesses. Like most institutions during round one, the average size of those loans were substantially higher than we saw in round two. The size and distribution, we did them as small as $400 up to about $1,950,000, which I think in one respect, we became a go-to resource, not only for businesses, because some institutions chose not to participate. Some of the large national banks chose to limit their participation to existing customers. So we had many small businesses left out. And we stepped into that void. We held weekly Zoom, almost daily Zoom calls during the first couple of weeks to answer questions. And so we found ourselves being a resource to accountants and attorneys, other bankers and small businesses, which I think really elevated our bank's brand in terms as a resource. And we continue to take applications. Like everyone else, we're trying to figure out what to do on the forgiveness and the ever-changing rules that the SBA issues. So we're still very much in kind of midstream on this because now we get into the next phase of it. But we consider it a success. It is something that in distressed communities, bringing liquidity and vibrancy to small businesses, which are the foundation of our economies, was critical. It was, in our judgment, not even an option to not participate.
And as you said, you did have some really great momentum for your first quarter. How can you, I mean, what's kind of the outlook look like for your second quarter? Obviously, you don't have a crystal ball, but what are you expecting?
Well, I've told our board, and we've talked about this a great extent internally and in the other investor conversations we've had. I kind of view the second quarter as a throwaway. It's not an indication of what happened previously, and it's not a predictor of the future. So I think we've taken the approach we have to do what we have to do to ensure that we're positioned to go into the rest of this year in as strong a position as we possibly can. We've adopted what I call a barbell approach to managing the company. If you live along the Gulf Coast, you have a sense of how you prepare for hurricanes and weather events. And so we view all of this like a storm coming north in the Gulf of Mexico. We don't know whether it's a Category 1 or a Category 5. We just know there's something coming. So we're kind of preparing for whatever may come our way. We have dusted off the archives and looked back at some of the best practices from the last recession. We've set up a team to be very vigilant in monitoring asset quality. And we're very pleased with what we're finding as we go into this period of time. We continue to build reserves in anticipation of the uncertainty. Obviously, the margins are being impacted by the change in interest rates. When you put $50 million on the balance sheet earning 1%, it's going to show some lower rates on our yielding assets, but our cost of funds also have dropped as a result of it. But so we're below where we would have forecast. Our budgeting and planning that we had for the year, we basically threw out the window and said, it's interesting, but it's not really relevant to what we're having to do now. And once we close Q2, then we'll begin to do a much deeper dive in looking at the forecast for the balance of the year. Q2 is going to be impacted by some excellent one-time events. One of the programs that we manage as a CDFI is the Capital Magnet Fund. And we received notification from Treasury that we received a $6 million award, which will show up as a one-time earnings impact in Q2. So that certainly will have a positive impact on profitability and loan production as we go into the rest of the year.
We'll look forward to hearing more about that. And lastly, the company last year upgraded to the OTCQX. Was that a good move for you?
I believe it was. The company had had a symbol UBAB for a number of years, and we had shareholders who were very loyal to the bank. We recognized the need at a time if we were going to continue to grow, that we were going to need additional capital. So we reached out and did an offering last April of 19 and raised $26 million in that, with the anticipation that we felt like our story, while complex and somewhat difficult to understand, brings great value to our investors, and we were pleased to be able to have a positive response. And so we found ourselves in a position to execute those unique programs. Ag remains a strong part of our business model, and we always put a footnote on that. We deal with Southeastern ag and not Midwest ag. And typically it's counter-cyclical, but it's performing well. So we feel like the trends are looking very good for that. And the QX gave us a platform to tell that story more broadly, such as this interview and the other opportunities. The liquidity has shown to be there in the stock, and I think it's helping the value to hold up as we go into this time of uncertainty.
Well, Robert, it was really, really great talking to you. Thank you so much for the time today.
Thank you. Enjoyed it.